Well, in the last couple of days, the market's been nervous in terms of what's going on between the United States and China. The other factor that's played out is there a global slowdown that's happening? And today, in fact, Rima, there's a fresh cue that's coming in there. The Huawei CFO arrest, that's something that's, making the markets, global markets, very nervous?
Yes, absolutely. So anyway, they were concerned about a global growth slowdown with the flattening U.S. yield curve. And now on top of that, you've got some news which can have repercussions in the U.S.-China trade talks. So the Huawei tech CFO was arrested in Canada. And remember, this is a big Chinese company. It has revenues of more than $100 billion. It is one of the biggest telecom companies in China. And the CFO who's been arrested is actually the daughter of the founder, and she's also the vice president of the company. Now, the arrest that has been made, it's said to be temporary, but it is on account of the U.S. request for extradition related to violations of U.S. sanctions. The fear is that on account of this particular, the violations of the U.S. sanctions had impacted another Chinese company, ZTE, if you remember, some time ago, and that had crippled the company. In fact, they had to practically shut down for 2 months or so. So if now fear is that if Huawei is also banned by the U.S., the impact on the telecom equipment market will be quite severe, because what the company does is it basically provides all the telecom hardware for the big companies. So whether it's the telecom tower or the hardware which is needed for the entire network to run. So it's a very, very big player globally. So if it's banned, it's going to have repercussions in the U.S. companies as well. But more importantly, the fear is that will China, take a retaliatory stand? So obviously the tensions are a bit frayed. So anyway, the nerves were skittish, and now this has just added a spanner in the works for the U.S.-China trade tension. So this is a development that we will be monitoring very closely. And in fact, if you see the intraday chart of the Dow futures yesterday, at one point of time, it was in the green, and then there was this vertical drop that we saw, which pretty much coincided with this news coming in. So the Dow futures went down about 480 points. So since then, it's seen a bit of a rebound, but there was a vertical drop in the Dow futures chart yesterday, which coincided with this, which is what makes people in the market believe that this is going to be a factor to watch going ahead. Okay, all right, Rima, thanks so much for explaining that to us. But let's move on. Let's get to our movers and shakers segment. First up, we have Abhishek, who's joining in with his take and his analysis of REC and PFC. Abhishek?
Let's just bifurcate both the companies and understand what they do. So PFC has a cash of about 1,800 crore, and as per news report, they are expected to buy out government stake in REC, and that's about 52.6%, for which they'll need close to 11,000 crore of money. Let's look at the CRAR, that is a capital adequacy ratio. The PFC is at 18%, while for REC it's at 16.1%. The loan book of PFC is close to 2.93 lakh crore, while that of REC is close to 2.57 lakh crore. So PFC mainly actually gives loans to generation sector, which is 70% of its book, while REC gives it to transmission at 49% of the book, and generation about 45% of the book. Both of them finance to state sector, which constitutes around 80% of the portfolio. But REC is more profitable than PFC given the net interest margin, asset quality and return on equity. Let's hear out the management as to what they had to say earlier.
Honestly, I have virtually no information or knowledge other than what I gather from the media about this acquisition process. So let's await a more concrete and official feedback. I personally or professionally have absolutely no information. Power sector demand is growing, the investment needs are much higher, and this is across the value chain. I think people have not noticed the fact that there is a need for modernizing the existing thermal power plants, which is coming on board with the new FGD infrastructure. The renewables have grown. Today, renewables constitute 5% of my loan book, which was barely 1% a year ago. 2 lakh households are being electrified every day. By end of this month, we should have no household in this country without power. Now, all this would add to the demand substantially, not just in the domestic sector, but think of the agriculture, the rural industries and the rural economy. I think these are all transformational opportunities. Our loan book will continue to maintain a robust growth rate. I mean, we expect anywhere between 12 to 17% in the coming quarters as well as the years.
Okay, the big cue though for today is going to be the outcome of what's going to come from Vienna. Manisha is tracking that space very, very closely, and crude oil prices as well. Manisha, over to you.
Well, thank you so much for that. Yes, the OPEC meeting in Vienna is divided into 2 days, really, because today is the OPEC members meeting and tomorrow is the OPEC and the allies meeting. And we will be getting to see 2 press conferences, 5:30 p.m. IST on both the days as well. So that is when we will get some clarity. But ahead of that, the market are preempting a lot of stuff. 1 million barrels per day of a cut is what we are working with right now. Anything less than that, and you will see the crude oil prices actually continue to sell off much stronger from here, because that is the least that the markets are anticipating. We have seen 4% increase in the OPEC output in last 4 months. So what we really are looking at with 1 million barrels per day of a cut is 1% of a global output cut right now. And that's the minimum that the markets would want to work with. Anything more than that, of course, is welcome. If you see 1.3, 1.4, 1.5, then there is a strong rebound in crude oil prices that the markets will really have to prepare themselves with. But at this point in time, it is anybody's guess, because Qatar is exited OPEC. Iran is saying that they want to be excluded from the output agreement. US has been putting pressure on OPEC and allies to not cut output. So there is a lot of uncertainty as we get into these meetings, and that's exactly what is reflecting in the prices.
Okay, thank you very much for that. So 2 p.m. is when the meeting starts. Let's move on and talk a bit about the tractor companies. The stocks have seen a big fall in the last few weeks, but Sonia, Credit Suisse is quite bullish and they believe the risk reward is turned favorable now.
Yes, they do. In fact, as you rightly pointed out, the stocks have fallen quite a bit. M&M, for example, has gone from almost 1,000 to 750 in a matter of months. And Credit Suisse says that this is the best time to be buying these stocks. Now, they say that the tractor stocks have gotten derated, as after 3 years of a very strong growth, the tractor industry is poised to decline in FY20. However, on the contrary, they believe that the demand for tractors will substantially increase over the next few years. They say that the tractor population could double to 12 to 14 million because of a whole host of factors. A normal monsoon, the state subsidies, a strong construction activity will all keep the demand growing. So they say that this is the best time to be buying some of these stocks. The top stock in their mid-cap space is Escorts. They have a target price of 1,050, which is a big upside to the current market price. In fact, there's a big upside on M&M as well. They have an outperform there with a target price of 1,020. Back to you.
Okay, all right. Thanks so much for that, Sonia. Well, Maruti, that's the other big name that's down close to around 4%. We had the chairman of Maruti Suzuki telling us early this morning that the demand trends for FY20 continue to be uncertain. Let's listen in to what he had to tell us.
This year, getting to double digits is going to be very challenging. We are still doing our best, but the task is not going to be easy. And I would not be surprised if we don't get to double digits this year, because of the fact that this is a pre-election year. We've had full good years. We've not had a new model launch when we should have had. All of these things are going to come into play. We haven't got a long-term target. This year's target was, I think, about 125,000 cars. And I think that has been revised downwards to maybe around 110 or 115,000. I'm not sure of the exact number, but it has been revised down.
Okay, on that note, let's do a quick recap then of the top buzzing stocks at noon. We've got REC and PFC. Those 2 stocks you need to keep on your radar. Remember, there is a cabinet meeting which is there today. Oil marketing companies like HPCL, BPCL, IOC ahead of the OPEC meeting, which starts later today. Escorts, M&M, and finally Maruti Suzuki. On that note, we will slip into a very short break. Up next, we'll get you an excerpt from our mega exclusive conversation with the market veteran Ramesh Damani, member of BSC, and he's going to talk on the road ahead for the Indian markets and some of the sectors that he likes.